Well, the biggest thing is my wife. She doesn't fly, and I got to make sure I have enough alcohol and enough pills to get her on that plane. So my decision not to have insurance was the best decision I made.
You take very kind of calculated risks that I see people shy away from.
In those 36 years, I filed one stupid claim. I'll be self-insured. I have the money. I can fix it.
Explain what you mean when you say government agencies aren't insured. What does that mean?
I mean, municipal, county, and they don't pay State Farm. They have a fund. That fund covers any lawsuit, accident within the city.
What about general liability? Like if somebody trips and falls, breaks a leg.
If somebody's tripping and falling, they want to fucking sue me, they can sue me. I don't care. This year, like I really limited myself to work. Like I only do 1 to 2 hours a day, whereas the last 2 trips, it was definitely more than 1 and 2 hours. Like when I got up early because everybody's still in bed. I got up, I worked. Throughout the trip, I was on my phone, and then at night I was always working. On this trip, I'm only really doing it at night. A couple of days I did it in the morning when I had to record some videos for social media, and I decided to do that in the morning also for the like for example Chica Theta. The view in the morning is phenomenal. So I wanted to use that as my background. So I got up early, did the video for that. But I tried to limit it work to a couple hours a day, and that's it. Nothing.
And then what caused that evolution? Was it just at first doing it the first time and then just getting used to it, so you limited it over time, or is it that your systems got better? Like what caused you to be able to pull away even more and more?
Well, 2 things. My systems got better, and then the other thing was that I have more confidence in my staff.
And did that come because you put them in a position where they had to perform, and then you realized like, oh, they can, or you got different people?
Yeah. It's like anything else. Sometimes I've never been a micromanager, but I sometimes it's my baby. So I sometimes try to, I'm calling, hey, is everything good? Anything going on? Anything I should know about? Well, I don't do that anymore. If it's a fire, because sometimes I'll get a message, I'm like, shit. And I have to hold myself back from responding to the message, and just letting my staff take care of it. And then the other thing is getting used to, or getting the clients used to reaching out to the staff before reaching out to me.
And did you, over time, you just kind of learn to trust them more, it seems like. And then the second is how do you handle that transition? Because some of these guys are transitioning from okay, I'm the guy who goes on the appointments to no, my people go on the appointment. So how did you do that handoff because I'm aware that a lot of the clients, they work with you and they worked with you originally and expect to speak to you. So how'd you handle that transition?
Well, and I'll take the phone call, and what I do now is I'll take the phone call, I'll take the email, and then I'll forward that to the staff, and then I'll just tell the client, let me look into it. But I give it to the staff, they give me the answers, and then I told them to reach out to the client, unless I personally know the client, like Chris, I'll personally call Chris, versus relying on the staff to do the phone call. But if it's a client that I don't have that personal relationship with, I'll just tell the client, hey, let me look into it. I'll forward it to the staff, and then I'll let the staff call and update the client. But you have to do that, because a lot of times, and especially when you're starting out and you're growing your business, people don't, for some reason, they feel more confident in reaching out to you because you're the owner. But 99% of the time, your staff knows more than you do. Because you're for example, each property has a specific property manager. They deal with that property day in and day out. I don't. So I have to call them anyways and say, hey, what's going on with this? But the customer a lot of times feel more comfortable with you, especially if you were the one that brought that client in. They feel like they have that relationship with you, and they feel like you're the boss, so let me just go directly to you. But you really have to, take care of the client, but let your staff answer the questions.
And then what caused you to kind of say to yourself, I want to go once, like to make this trip like an annual thing?
Well, the biggest thing is my wife. She doesn't fly. So throughout the year I'll travel, but I travel alone. So I have to pick one trip a year, and that's why we extend it, because the only time she's going to get on the plane. She's not going to get on a plane any other time. So that's why I do that. We picked May because it's easier for it to take it off, and it's the only time I'm going to get her on the plane, and I got to make sure I have enough alcohol and enough pills to get her on that plane so she can get there. Otherwise, she ain't traveling.
Got it. It's interesting though, because even though like that's the case and you extended it, it's also helping you in your business because it's forcing you to create better systems and like that whole thing.
Yeah. Listen, I was forced to create make sure the systems were in place when I wanted to grow. In the beginning, I was doing everything, but when I decided that I want to grow and grow substantially, there was no way I was going to be able to wear all hats. So before I started expanding, I just focused strictly on my systems, my processes, so that once I started to grow, and even with that though, we still had a lot of heartache, a lot of learning as we were going. But I knew that was the first thing I needed to do if I wanted to grow. So once I got that, I mean, I was just focused on acquisitions, and those acquisitions came, and they came very, very quickly, which caused the growing pains because a lot of the systems we had, not only were the systems new to me, but they were new to my staff. So I'm getting bombarded by the staff. Hey, how do we do this? How do we do this? How do we do this?
And I think your threshold for dealing with that is very high. Would you agree with that?
Yeah, I agree.
And because what would you suggest or propose to people whose threshold isn't that high? Because I see a lot of people like they want to make a change or they want to do something different, but they don't because they don't want all of those, like they don't want it to they want it to be perfect as soon as they start.
Yeah, and that is, I think, the biggest problem with a lot of entrepreneurs is that they want, and most entrepreneurs are A-type people, and they want perfection, and a lot of them want control. And what you have to understand is nothing is freaking perfect. And I'm one of those people that I believe you learn through mistakes. If you make no mistakes, there's no growth. You got to get into those uncomfortable areas in order to grow. And in order for you to do that is that you have to accept that and actually want it. You have to want, like, I'll give you an example. And Aaron, you and I talked about this. A couple of years back, I decided I was going to get rid of insurance because the insurance was getting super expensive. Which was a big step and something that a lot of people were telling me that I was crazy. But I was waiting and I had things in place, but my staff wasn't tested when an emergency happened. And recently we had the floods in Fort Lauderdale, and it was, I'm glad, I mean, it wasn't a good thing that it happened, but it was a good thing for my business that it happened because it proved 2 points. It proved that the training that I was giving my staff was good because they responded phenomenal. I mean, it was the moment the floods happened, our emergency plan went into place and everybody knew what they had to do. That was number one. And then number two, it proved that my decision not to have insurance was the best decision I made because I was able to get my properties up and running, and there's still properties in my neighborhood that an adjuster hasn't even showed up yet. So had I been in that position, I'll be hurting because there's 4 properties in that neighborhood in which I'll be losing revenue. I'll be on our second month of losing revenue on 4 properties. where that's not the case now. So you want those things to happen because you want them. It's like I tell everyone, people think they're good, but they don't really know they're good until they're tested. And when they're tested, if they pass the test, then you can say, yeah, I'm good.
Yeah, that's really good. So what I see you doing and what you've done in a short period of time is directly correlated with what you just said, but also your willingness to take risk. We talked about that when I was at your place the other day, where like you take very kind of calculated risks that I see people shy away from. Can you talk a little bit about that?
Yeah, you have to be a risk taker, and everyone has their threshold of how much risk they want to take. I take a lot of risk, or in some people's eyes, I take a lot of risk, but oftentimes those risks are calculated. I go through every scenario in my head, and I go through what's the worst thing that can happen. And I'll go back to the insurance case. We tested it on one property. I first I looked at the numbers. I've been in Florida 36 years in Florida. Went through countless hurricanes, and I looked back and I looked at my insurance and how many claims I've ever filed. And in those 36 years, I filed one stupid claim, right? And I looked at the numbers and I'm like, I went through all these hurricanes. I've only filed one claim, and it really wasn't that bad. The damage wasn't that bad. So based on that, I'm like, if I stop paying for insurance and do what I refer to as self-insured, open a separate account, put those premiums into that account, that if something happens, I can back myself up with, then I'm protected that way versus trying to get an insurance adjuster and going through insurance companies that they never want to pay anyways. And going through that headache. Now, when I did it though, I did it when we weren't in hurricane season. So I waited for hurricane season to be over, and once hurricane season was over, I cut off the insurance. And then I waited that 1 year, and then the second year came, no hurricanes, the third year came, and then I looked at my bank account, I'm like, holy shit, I should have done this fucking 30 years ago.
Yeah, because in the meantime, and maybe you can explain the mechanism. So what you're doing is every year you're putting what you would have paid in premium into an account just in case some shit happens. And you were doing that on every single property.
Yeah, correct. So on that, for example, on that one particular property, I knew what's going to go. For example, if in a hurricane, the weakest point in your property is the roof. So if anything's going to happen, it's going to happen to the roof. So the question that I asked was, how much is it going to cost to replace this roof? So at that time, to replace the roof was $15,000 to get a brand new roof, right? And then add in, it was actually like $12,000, but you add in a couple of other thousands if there's leaks that you have to repair the inside of the house, etc. Right? So it's $15,000. So I estimated what my premiums were for a year, and I figured in 2 years I'll have the $15,000 in that account, and if something happens, the roof is protected. But I'll go back to the point that when I looked at it, I looked at my portfolio. It was 20-something properties at the time. I looked at the portfolio and I looked at how many I can pay off and how many were paid off, so that I can have a big nest egg very, very quickly. So I think it was 3 months, I think we had like $75,000 in the account, which would have taken care of the majority of the properties that were paid off at the time. So I was like, okay, I got the money, I'm good to go. I'm gonna, as I start to pay off properties, I'm gonna get rid of the insurance. And I think I mentioned to you before, I ended up having so much money that in the last couple of years, I had enough money to buy properties cash. And I used the surplus from those accounts because I only want $250,000 in those accounts because that covers all my properties to replace the roof or any major issue. And at the end of the day, I'm gambling again in the sense that I don't think I'm going to have to repair or replace all the property because they're not all sent in the one location. They're spread out. So I use that threshold of 250. Anything over 250, once I get to 500, I'll take off 250 and buy something else. So we ended up doing that. At one point, I had like $800,000 in that account. So we took that out, bought more properties. But that was from making that one decision of not fucking having insurance.
And how many people told you were crazy?
Everyone. Not one person told me it. Not one person said, yeah, that's a good idea.
Yeah. Which is interesting. So how did you I feel like a lot of people make decisions externally. So even though everybody said you were crazy, how were you no, I think this is right?
Yeah, I just looked at the numbers. I'm like, there's no way. I've never, like I said, in 36 years, I filed one insurance claim. They fought me on that insurance claim. I had to pay for an adjuster to get them to give me more money because they didn't give me enough. And I'm like, this is such a scam. So that's when I said, I don't care what anybody says. I'll be self-insured. I have the money. I can fix it. Like I said, in this case, we were able to. My team was in there the very next day. Some properties we couldn't access because the water didn't recede for 3 days. But the ones that we accessed, we went in there, put the fans up, put the dehumidifiers up, cut out the drywall, set everything up. Within a week, like my Pico property, we were up and running within 4 days. I think it was 4 or 5 days. We were up and running.
Which there's properties in that same neighborhood that they're not even operable now.
In Edgewood, which is where the majority of the damage happened, I don't think. There could be a few now because I've been gone for a while. But before I left, there wasn't a single property that an insurance had paid them out yet. Not one.
So what's your rule of thumb? Is it just having, for my own knowledge, is it just having enough money in the account to cover a roof and that's it?
No. It should cover to cover the roof, any furniture and repairs. So the whole house could blow away and we will have enough to fix one single house, obviously. But most of the time, it's just going to be the roof and some flooding.
Got it. So if somebody owns a property, you'd say okay, if the roof was 20 grand plus some furniture, which is 10 or whatever, plus maybe another 10. So if you had 40 or 50 grand in an account, you're fine.
Yeah, you're fine. Correct. Now we have in our fund, right? The minimum that I want in my main account is $250,000. That covers several properties. But sometimes when we're not buying anything or I forget and the money just goes in there. Like I said, at one point we had 800-some thousand in one of the accounts. I'm like, shit, get that money out of there.
Because what you're doing is you're automatically from each property, the net income from each property, you're taking a portion of that and putting it into the account. Is that correct?
That's correct.
Okay. And what is your rule of thumb? What portion? How much? Is it 10%? Is it
No. I pay, so whatever the premium was, that's what I kept paying.
Got it. So if the premium was $10,000 for the year, then you keep putting money in there until it's done.
When I started, it was just a few properties, and then but again, was every year, or I didn't do it yearly. I did it monthly. Every month, whatever the premium was, it went in, and then the more properties I had, the faster that account grew. So now, like I said, sometimes if I don't monitor it, sometimes it'll go over that 250. And then if we have a need in terms of we're going to buy something, we're going to do an acquisition, then we take the money out.
Essentially what you've done is you're your own insurance company. That's what insurance companies do, is they take excess amounts of money and invest it.
Well, the way I got the idea of doing that was because that happened when I was still in government, and I don't know if you guys know, most government agencies are self-insured. They don't have insurance companies. So I'm like, shit, if they can do it, I can do it.
So explain what you mean when you say government agencies aren't insured. What does that mean?
Yeah, so government agencies are self-insured. Every single government agency. So for example, every federal agency is like Fort Lauderdale, City of Miami, whatever, municipal, county, and state government, they're all self-insured. They don't pay State Farm. They don't, they have a fund, and that fund covers any lawsuit, any, accident within the company, or within the city, that covers that. So my thought process when I started thinking about doing that, I'm like, shit, I'm going to be self-insured. They can do it, and they're doing it for a reason. They're not doing it because it's good business practice. They're trying to nickel and dime everyone. So they do it. I'm like, I can do it.
Yeah, and then just so I'm clear as well, you're not putting the whole premium. So if it was like $10,000 for the year, whatever that is, $800 a month is what you'd be putting in.
Right.
Yeah, and then once you get it, then you're good and you move on. And once it hits a certain amount for that property, then you stop.
Then I stop. Like for example, let me look at something because I think I have the numbers for your property.
Let's go.
Let's go. What about general liability, Fernando? This is a house lease. What about like if somebody trips and falls, breaks a leg, sues for $250,000?
Yeah, I don't do that. But you could, and that's the cheapest insurance you can buy. If somebody's stupid and fall and they want to fucking sue me, they can sue me. I don't care. But I will say this: if they and I only know this because it's happened to me already. I had a lady fall on one of my properties in the pool, and she hired an attorney. And then the attorney sent us the letter that we're being sued and asked for our insurance policy. I wrote back, I don't have any. He dropped her. And I didn't get sued.
Is each one of your properties in a separate LLC? I mean, how do you have your entities with each property?
Yeah, I think the first 4 properties, there's some of them are, the majority are in entities, but in groups of 4. But the first 3 properties that I purchased are not. They're in my regular name. Initially, I was doing one property, an LLC, and the next one an LLC, and the third an LLC. And then my accountant said, "You're killing me, bro." So okay, let's restructure this. You end up paying more than you think when you do that.
I agree.
All right, so here, let me see if I can share my screen.
Yeah, and one of the things we were talking about earlier today, Fernando, is this idea of like going up the opportunity ladder and leverage, and you've done that. That's what's created freedom for you. And I showed them a screen and how this is the property that I purchased and how this fits into that strategy of creating residual that creates margin and ultimately freedom.
All right, so here's Aaron's. So there's 2 scenarios, okay? So this is the first scenario on Aaron's property that we discussed. And so this is the first scenario. This one financing the property. And obviously if you finance the property, you have to insure the property. So, and this first scenario, his monthly income is going to be around $9,000 a month. His expenses, though, are going to be about $6,600 a month. His cash on cash will be 11%, with his purchase cap rate of 10%. But so if you look here, these are the expenses. Look how high his insurance. It's $1,000 a month, and this is without. Aaron, correct me if I'm wrong. This is without the renter's insurance or any contacts, right?
Yeah, that was for short-term renter's insurance. So that's like the full fucking Monty was $1,000 a month.
Okay. So this is with insurance, right? And these are the numbers. He's looking to cash flow $2,300 a month, etc. Right? If he went ahead and paid this off and got rid of the insurance, then his purchase cap goes up to 12%, and his monthly cash flow goes up. But here's where the numbers get really interesting. In 5 years, if everything stays the same and you increase your revenue by 2% per year, which is a very conservative number. If you look at his profits, that's over $600, almost $700,000 in 5 years. If he were to sell that property, that will be what his profits are. I don't know about you, but I don't know very, very few vehicles in which in 5 years you're going to profit $600,000.
Includes you're including cash flow plus appreciation, correct?
That's correct.
Yeah, and then what's if you go up in the other one? The scenario is because that's what I'm going to do is when you pay it off, that would end up cash flowing approximately how much? Because I'll get rid of the insurance and like that whole thing.
So if you look at your annual cash flow, well, let's just year one, you're looking at $71,000 a year.
How much? I didn't see it.
71,000.
Oh, 71,000 a year in gross revenue.
Yeah, correct.
Got it.
Well, that's your actual, well, gross cash flow. That's what you're looking at.
And that's with it paid off.
That's paid off.
Okay, so paid off, it's about $7,000 a month.
Correct.
That's fucking awesome, Fernando. And how many of these do you own free and clear? Well, and what he didn't mention there is this year, for the remainder of the year, short-term rentals are 80% year one depreciation. 80% of yeah, you have to do a cost segregation analysis. You can't depreciate the land, but you can depreciate the asset. So that property, separate from that cash flow, will save me probably $40,000 in taxes. And then the intention, Fernando, Justin told me I got to buy one more this year. So that's the intention. We got to find one more.
I told you, sell your townhouse.
I'm going to. I'd rather own two. So think about that. If you own two of those free and clear, it's anywhere between $12,000 and $14,000 a month in residual income. And remember, yeah, like I'm fine with that. So I'd rather own two, give them to Fernando and let him do his thing. And with two, let's say 12 to 14,000 plus 8,000 is 22 plus rev share is 20. It's 42. I'm more interested in cash flow. Than spreading out the fucking money across assets. Like I want cash flow. So I'd rather own two of those things. Instead of owning four where there's mortgages, I'd rather own two that are five where there's mortgages. I'd rather own two that are free and clear. Because they're cash machines.
Yeah, listen, I agree with that statement. Using leverage is great because you can increase your portfolio quickly, and make it bigger. But at the end of the day, owning an asset that is, for example, a real estate asset that's paid off, and you have the ability to, if you needed to, go and tap into that and pull money out. I got to tell you, it's the greatest feeling in the world that you're getting the cash flow assets. Because I'm like Aaron, I want cash flow. I don't care where it's coming from, but I want cash flow. Cash flow is king. But if the property is paid off, it's there's so much more you can do than when you have a mortgage on it. And I've been seeing this in the last couple of years. And you guys are going to probably see it now, especially if some of you guys probably already saw it. Borrowing money's not cheap anymore. So borrowing money is going to get, if it's already expensive, but it's going to get really expensive. And depending on where you live in the world, insurance is going to kill all of us. Because we looked, I can't tell you how many deals I turned down. If I had to finance that deal, I couldn't get into it.
Yeah. So what it seems to be like, and I appreciate like the foresight, because I agree with you completely that I think people are like, they think we've like settled at the cost of money. I'm like, nah, bro, it's going to go up. Like you're going to have to get ready for like 7%, like to borrow money, maybe 8%, you know what I mean? Like it's going to go up. So what's happening is these things are cash machines, but the barrier to entry is you have to pay cash. That's what's really happening. Like they're okay. Remember what you told me, Fernando? You're like, yeah, like this is like an okay deal. It's not like a slam jam home run, because when you initially looked at it, you're like, oh, it's like 20%, but it's like, oh, it's like 11% return, and you prefer it to be 15%. But by paying it off, then it's going to be like $7,000 a month in residual. And if you own two of those free and clear, that's what allows you to travel to Europe and not worry about money, is the cash flow, not my asset base.
Hey, Fernando, question. It's Mark.
Hi, Mark. How you doing, buddy?
By the way, thanks for that conversation you had with Derek and I about a couple weeks ago.
No.
So based on what you and Aaron just said about paying cash, I got two rentals in Orlando. One's the duplex if I sold them, I would probably net about 8. Do you suggest just take, because you looked at my duplex and you said I would be earning like double
Yeah.
if we could have done short-term rental, but Orlando's not allowing that. So do you think it'd be better for me to just sell those, pay cash with the equity on a couple short-term rentals because I'll have greater cash flow than what I'm getting on those regular rentals?
Well, I'm going to lean towards yes, but let me ask you a couple of questions before I do that. Currently, what was your cash on cash return on that property?
It's been so long on one because I think I only didn't put a whole lot of money down. I don't know the numbers on it. I have to look. But
Figure before you do that though, figure out, because I'm going to assume 2 things. If you bought it a while ago, I'm going to assume that your interest rate is below 4%. Is it?
yeah.
Yeah. Yeah. So your interest rate's below 4%. You probably bought that property when the market wasn't as crazy as it is now. And then the third thing in there is you probably have a lot of equity there. And because how long have you had the property?
One of them I've had since 2001. The other one I've had since like 2011. It's almost paid for, the one from 2011.
Yeah. So you've owned them long enough. What I would do, your 2001 one, just pay that off. Instead of selling them, just again, look at what your insurance cost is. If your insurance cost it's eating up your cash flow, then just pay it off. But if not, just keep those properties because your interest rate is too good to get rid of.
So people ask me all the time, they're like, Aaron, how are you on all of these different social media platforms all at the same time, all at once? I can't get away from you. The truth is that I have a strategic partner that helps me with this. They're the folks over at EC Creative. And they not only send me the ideas, they also do all the editing and posting. So what looks like it takes hundreds of hours per month to do is really only taking about 8 hours per month. So if you're interested in finding out some more information about EC Creative, DM me the word social.
Like the properties that I haven't paid off, which are very few, the ones that are my interest rate were less than 3%. And I have a few with interest rate less than 3%. So I don't want to pay that off because they're not and my insurance aren't high because these are in areas with insurance are pretty cheap. So I just minimize insurance on those, and I've had them long enough that they're cash flowing great. In fact, my cash flow on one of them is like 20, or my cash on cash return is over 23%. So that one I would keep. So do your numbers, or if you want, send me the info. I'll do your numbers and I'll let you know what's the best route. I say that today. I say that about buying cash today because today, as an investor, your interest rate is going to be in the 9s.
What stage in your life you're in?
That's interesting. I mean, I don't know if it has to do with stage. I think it's like what you really value most. I just want cash flow. Like that's what I want.
But I think it comes down to stage, bro. I notice this thing is like more in stages. Like had I gone, like let's say interest rates were 7% 10 years ago, and had I gone into it with the mentality that I had to pay for everything cash, I wouldn't have accumulated the portfolio that I had now.
Yeah.
So I even think that when Fernando, and correct me if I'm wrong, when you were probably building up your portfolio, you probably didn't pay for everything in cash. You accumulated rental properties, and then as you accumulated rental properties, then you at what stage in your life?
I think the stage in your life and also stage in the market. Because when I look at Grant, the last deal he bought, he paid cash for. Because the money, like the financing doesn't make sense. He has to pay cash in order for it to make sense. And I think also too, most people use debt because they don't have enough cash.
I think it's more based on the deal. So I think on top of that, on top of like what stage in the market, it's case by case. So like what I would say to everybody is it's case by case attitude. It's case by case as to where you're at in what stage you're at in your life. What do the numbers look like on the deal? Like, are you getting eaten up by insurance or not? How much, or what's your cash on cash return? And then it also comes down to, yeah, those two things.
Yeah, and kind of like, again, like how much is enough? So like, I think a lot of people who use debt as a tool, they're just like scaling for the sake of scaling, and they want to go bigger, 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 bigger. I'm just interested in getting to a certain amount in residual. That's it. Like, that's all I care about. Like, once I hit that, I'm fine.
It also has to do with taxes.
And the only reason I'm doing this, two primary reasons. One is because Fernando's a world-class operator. Otherwise, I wouldn't fuck with it. I would definitely not try to figure out how to do it myself, or not. I wouldn't mess with it at all. The second reason is because Justin, who will be here on Sunday, I think, I paid him and he looked at all of my assets and stuff, and he's like, bro, like, this is the only way that you can reduce your tax bill in a meaningful way. Because when you start having tax bills that are like 250, 300,000 bucks, you're like, I might as well buy a property and get. So when I was having this conversation with Fernando, he's like, look, and I talked to you about it, because it's like, look, you could either spend $50,000 in taxes, or you can buy a property, get cash flow, get depreciation, and get appreciation. Like, which would you rather do? I'm like, okay, well, I would rather do that.
Because if somebody has a tax bill and they have an opportunity to buy one property in cash, and one property doesn't solve that tax bill, they may want to go leverage 50%.
Yeah, that's fine. But remember, the whole issue is a lack of capital. Yeah, I feel like my issue is not that I don't lack capital. I just lack, I have the capital. I might as well fucking use it. You know what I mean? So it's like, if I have it, I'd rather deploy it and just cash flow day one. So like Fernando was like, some people when they do this, they set them up, they don't get new furniture, they don't fix shit. He asked me, he's like, how do you want to do it? I'm like, just fucking do it. Like, I don't want to like bitch meal it out. You know what I mean? Like, try to piecemeal it together and have it make sense. I'm like, nah, bro. When we go in, this fucking thing will be free and clear and completely renovated. And the only thing that it's going to need moving forward is a roof. That's it. As time progresses. At the event, we did a panel, it's an investor panel. And then what people didn't see is outside, Terrell's on the phone trying to fuck with a deal that's trying to close, and they don't want to close, and he's got to move the thing. And I'm like, bro, look, I love you for that. I'm not doing that. Because to me, I'm like, I could, with what I showed you before, remember what I showed you with RevShare? Bro, this shit is just hedging against that. This shit is like, if RevShare goes away, I'll still make $25,000 a month. You see what I'm saying? That's all it is. That's all I see it. Right. And then if it's free and clear, if I have the money for the fucking roof already, it's like all ready to rock. Bro, that's like this. and Fernando's handling it like I'm not doing anything.
I mean, when I started, every deal I did was a finance deal, but it was a finance deal because money was cheap. You have to look at the circumstances. Money isn't cheap right now. It doesn't make sense to get a 9, 10, 12% interest rate on a property and paying market value for the property. If you're buying a property that's well below market value, have no problem paying that 9, 10% and then hope to refi later. But it's always the deal is what matters, and the numbers are what matters, regardless of what the interest rate is, regardless of what the insurance is. The numbers need to make sense, and also depending on what stage you're on. Like, for example, when I was in my 20s, I had no idea what the fuck I was doing. I was just buying properties, keeping them, not really paying attention whether they were making money or not, because I knew I wasn't looking at that period of time. I was looking 20 years down the road, and any property you buy 20 years ago is going to do great today.
Fernando, let me ask you a question. Like, you say you started out like leveraging debt. Did you dispose some of those properties to end up where you are now? Like, as far as paying off, most of those loans. I know you say you free and clear on everything. Like, how did you arrive to that point?
I just had them long enough. Like, that's why I asked Mark, like, his 2001 property, once it gets closer to being paid off, like in the beginning, when I was in my 20s and 30s, I wasn't looking at making money on the property, meaning I wasn't looking to use that cash to live on. So whatever money I made, I put right back into the property, either put it towards the mortgage or put it to do some improvements on the property so I can increase the value on it, so I can continue to increase the cash flow on it. But I wasn't touching the cash flow. Like, I lived my wife and I, in my 20s and my 30s, we literally only lived on one paycheck, and we both worked. But we lived on one paycheck. We only had one car. I can tell you that I never owned a brand new car until, in fact, when I retired from law enforcement was my first brand new car since I was 18 years old. Like I didn't own one. We only had one. It was all about our end goal, which to be financially secured by the time we were in our 40s. And we did that, but that's this. I go back to what Jose just said. It's on stages. I didn't need that money to survive. Whatever I made went right back into that property to pay it off. The goal was just.
Right. Does that make sense? So I think it's just, it's figuring out, again, like what you value most, but what keeps most people stuck from pursuing the things that they want? A lack of cash flow. And here's what I've learned. It is not money in the bank that alleviates financial stress. Cash flow does. It is not money in the bank that allows you to be bold. It's cash flow that does. You see what I'm saying?
So the sooner I pay these properties off, does that mean, Fernando, take all my cash flow from the current properties I have, just pay down the debt?
Yeah, correct. If you don't need the money, and most of us don't really need the money right now, if you don't need the money, the goal is to either get additional properties, meaning more acquisition, or pay off your debt, pay off these mortgages so that you can get that out of the way. And then that property, it's like Aaron said, it's no longer a headache. You're eliminating some risk because you don't have a mortgage on it anymore. You don't have to worry about anybody coming to take that property from you. And then once it's paid off, man, it's just your cash flow doubles, right? And again, if you ever needed the money, it's there.
Right. Like it's like another bank account. If you ever needed the money, you can go get it. So what you're doing, so the thing to think about, so this is interesting, like when you think about this, because we're talking about like, you're like, oh, well, I'm using this well, all you're doing is exchanging one currency for another.
Right.
Like the property is a currency. So you might be like, dang, bro, you're putting like 70,000 bucks in that one property. It's like, yeah, but I can access it whenever I want, if I ever need it. Right? And again, like what the main issue is for most, the whole goal, okay, so as Fernando was saying this, how many single family residential homes would I need to own with debt to get $7,000 a month in residual income? How many? 10? And how much headache would that be? How many fucking toilets and bullshit and nonsense and like all this other garbage that you would have to deal with? Where you could just own one, concentrate the capital there. It's like it doesn't require too much time, energy, and effort. Again, I want anything that I'm investing in to be like just fucking vanilla ice cream, like not with a super high degree of probability it's going to produce what I want it to produce. And it requires very little time and energy on my part. Yeah. That's dope. Awesome, Fernando. Anything else you wanted to share with us? Any kind of insights? Anything you see happening with the market? Anything else you had planned for us? I know your time's valuable. What time is it there, bro? It's like fucking 11 o'clock at night.
No, it's actually 9:49. No, I just want to, real quick, if we can go around the room and tell me how you guys are doing. What have you gotten so far from this little get together? Let me start with Brian.
I can start. I mean, everything that you have said, it makes total sense. At least for me, I mean, I'm probably one of the youngest in the room, and the fact that I'm able to expose myself to everyone, especially like, because me and my wife value travel. So I can relate a lot to the lifestyle that you have. That's pretty much what we want to have. You know what I mean? We've been traveling because you can travel on a budget. We've been traveling since we didn't have anything, but there's different ways to travel, So we want to travel comfortably. So there's, the options that money can buy you makes a huge difference, and the freedom that you're not attached. Also, the length of the travel too. It's not the same for a week, being in Europe for a week, than spending a whole month. So I can relate to that. And it makes total sense, everything that you said, and just put it in perspective. Man, it's just, I'm thinking small. Like, I keep putting excuses to myself, but seeing you where you are now at your age and, basically telling us that you accomplished the goal that you set, at maybe my age or younger, it's just inspiring. So thank you for that.
No, you're welcome, and thank you for sharing. That's pretty good. Chris, talk to me, buddy. How you doing?
Still fucking with the county and the city with permits. Well,
Yeah.
The one that's in the city of Miami, I'm gonna finish that one up, sell it, and then pay off the one that you're doing the Airbnb on. So
Nice, good.
it's mine, I'll kill the insurance on it, and make what, $7,000-8,000 a month just on that.
Yeah. That's a good property. I like your property. That's good. How about you, Mark?
Good.
The insight that you gave me today is causing me to think about just keeping what I got and just getting the debt rate down. So thank you for that. Are you, now when you're traveling in Europe like you're doing, are you staying in hotels or Airbnbs?
Airbnbs. Well, let me take it back. It depends on this. Like, we're in Milan now, and I'm staying actually at the Marriott in Milan, because I have so many points on my credit card, and depends on the city. But for the most part, we stayed at Airbnbs. I'm gonna add a little something to what Brian was talking about traveling. Even when we didn't have the cash flow that we had, but we still made good money, and we still did some traveling. We never stayed away for this long, but the reason why I love the short-term rental game, it's not only because it's the business that I'm in, but when I travel, the best experience I've had has been in a short-term rental. It hasn't been in a hotel. So for example, when we went to Tuscany, we stayed in an Airbnb in Tuscany. The place is family owned. The same family has had it since 1805. This thing was beautiful. It's old as shit. But it was beautiful. I mean, you get to experience that. I would never experience something like that had I stayed in a hotel. Plus, we get to wash our clothes because they all have washing machines. We bought the wine that we bought when we were going to. We went horseback riding a couple of times and do wine tasting, and we would buy the local wines. Then we come back to the Airbnb. We had the cheese. We watch the sunset over the mountains. I mean, that stuff is pretty cool that you can't do if you stay in a hotel. So yeah, I stay in Airbnbs, and I steal ideas too when I travel. So who else is there?
Hey, Fernando, it's Ben.
What's up, buddy?
Yeah, I mean, I think what I'm taking away from this is, and Aaron and I talked about the speed at which you make decisions. I make decisions extraordinarily slow, and although I've made a lot of decisions in the past couple of years faster than I'm used to, I'm just seeing how quick people make decisions, whether they end up working out or not. The time it takes me to make a decision, I could have just failed at something and then started the next decision anyway. And in all likelihood, I'm gonna succeed on 75-80% of the decisions anyway. So the time it takes me, so again, just being around these people that make quicker decisions just allows me to feel more comfortable just pulling the trigger on things and finding out one way or another whether they work or not. So
Good. I like that. And what's interesting that you just said, and you guys being together, I just watched a podcast with Brandon Turner, and I know her last name is Sanchez, but I think her first name is Cindy. I'm not sure. And one of the things she talked about in that podcast is exactly what you guys are doing. And she referenced a study that said that those individuals that hung around or worked with people that were high producers didn't have to do nothing special, and they themselves would produce 50% more versus hanging out with people that weren't high producers. They could have studied and did a lot and would not have produced the equal amount of value or gotten the equal amount of value or produced as much. So it's good that you guys are together. It's good that you guys are sharing stories. because you will see the benefits later on. And studies have proven that this is what you guys are doing. It's what makes a big difference, and now it's quantifiable.
I had a quick question for you. What, with your experience with short-term rentals and rentals in general, like what are your minimum standards when you evaluate a rental opportunity?
When you say minimum standards, you mean what thresholds in my numbers?
Yeah, numbers.
Yeah, I need to make 10%, minimum 10%. I shoot for 15 or higher, but a minimum 10% cash on cash. That's my goal.
Which is why when I was saying that the deal that I'm doing is like, it's just slightly above that 10%, but by paying it off, then it becomes better.
Anybody else?
Fernando, what's up, man? It's Heath. How are you?
Hey, what's up? You were hiding back there, huh?
I was. What I just wanted to point out, I appreciate what you talked about as far as your risk taking, like the insurance thing, like that's unheard of down here in South Florida. Like with the hurricane and the potential tornadoes that we had during the hurricane. So the way that you calculated that is so impressive. That you figured that you can set that money aside and you'll have that cushion in case something happens. You went right in there in the floods, took care of your properties, got it back up and running when that rest of the neighborhood is still recovering, So I think that being able to take a risk that you see as it's a risk, but you calculated it, then it becomes not so much of a risk. And other people are still you still tell that story to people, they still look at you like you're crazy, I'm sure.
Yeah. They're like, oh, you see what happened with the flood? I'm like, exactly. I did see what happened with the flood. My property's up and running. You guys still haven't even gotten, like, for example, right now, the biggest problem in Edgewood is the mold, because they can't go in there and touch it because the insurance company has to come and evaluate it. And the longer it takes, the worse the situation gets. And I mean, Edgewood is just a disaster right now. And they can't get the money. FEMA came in and gave checks, but I think the minimum or the maximum FEMA's given is $5,000, which only covers the deductible on most insurance policies. So, and you guys are saying risk. Like I don't think I'm taking a risk. I think people that get insurance are taking a risk. So I just see it way different. And like I said, most 99%, I think, like I said, no one, when I first did it, agreed with me. Some people now that see it and like, oh, yeah, you're right. But still, 99% of the people are like, oh, you're crazy. You're in South Florida and you don't have insurance.
Yeah.
Well, Fernando, I think you said something that stood out to me, and I do the same thing. Like sometimes, like when I was talking to Ben's like, I feel like sometimes you make decisions faster. I'm still slow, but I do make certain decisions. And you said that you look at worst case scenario. And that's what whenever you calculated the risk, you're like, okay, the roof is worst case scenario. So whenever I make decisions, I look, what's worst case scenario? And if I'm comfortable with worst case scenario, then I go.
Yep.
So like if I'm buying a rental property, it's like, okay, what's best case scenario? Everybody looks at that, best case scenario. Mm-hmm. But most people don't look at what's worst case scenario. And if you look at worst case scenario and you're okay with it,
right?
There's no reason not to do it.
Whatever that is, whether it's
whatever
worst
case scenario is.
whether it's like
what's worst case scenario?
What's the worst case scenario?
Like I think that there's been certain situations where like somebody, my staff comes to me, they're like, oh, do you want to do this? I'm like, well, what happens in this scenario? Like this happens, I'm okay with it. Let's do it. Like we were doing termite on a property before contingencies got removed. It's like, what's the worst case scenario? $5,000. Let's do it. Like that's what I'm okay with. Worst case scenario.
Yeah, that's awesome.
And I think as long as you're okay with that,
then you move forward.
Yeah.
I agree.
I literally wrote that down. When you said that, Fernando, you have to take risks and then ask yourself, what's the worst case scenario? So that was like my big takeaway from, which was good.
That was
on your part, yeah. From a guy who works, 1 to 2 hours a day and travels the world, which is what every single person wants to do if you ask them, if you have freedom, what do you want to do? I want to travel the world.
Right, that's what he's doing.
That's what you do.
But you're making a direct correlation with you have to take a risk in order to do that.
Correct.
Yeah, so even, and I'll, like, even authentically, like, when we started having those conversations about the property in Hollywood, he starts telling me about the insurance, I was like, what the fuck? Like, what are you talking about, Fernando? That sounds a little crazy to me, man. But then the more I talk to him about it, and because he's done it, it's, okay, so I might be that person for you guys in certain areas, but in the investment area or in, like, with short-term rentals, he's that person for me. Where there's like this bridge and he's like, yeah, bro, like, it'll be all right. Like, it's fine. Like, here's the reasons why. And then we had the experience with the Edgewood thing, and I saw the property had fucking water like 2 feet high. And he's like, yeah, dude, it's like up and back on the market. I'm like, what? And I know somebody personally in that area who still is not in their property.
Yeah.
So
Well,
I'm
that's
like,
how inefficient insurance companies are.
well, yeah, and what it makes me think about is we're having this whole, it's funny too, Fernando, that it keeps gravitating towards the insurance and like risk, is I heard Charlie Munger, who's Warren Buffett's right-hand man who built Berkshire Hathaway with him, they own like the largest insurance company in the country, it's just Geico. And you know what Charlie said on TV, on like Squawk Box, CNBC? He said, yeah, like if you have enough money, you should self-insure. And the lady was like, you do realize you guys own like the largest, and she's like, yeah, I know. But I'm still gonna tell people what like the right thing to do is like if you have enough money, you should self-insure. And that's exactly what you're doing.
And I think it also depends on like the policy amount. Like, cause whenever Fernando was saying that, I was looking at my policies. I'm like, how much are my policies? In California, they're like $60.
A year? Oh, a month? So it's like 500 bucks a
It's
year.
like $500 a year. So for me, it wouldn't be worth it.
Yeah, but for me, if it's fucking $1,000 a month, you're like, nah, bro.
Yeah.
I gotta
Like $50 is not going to change my cash on cash return.
That's not with
like the
earthquake
needle.
insurance, though, I
It's
imagine.
not, no. But for $1,000 it would.
Yeah, that's one of the reasons why I decided to self-insure was that for that reason, because in South Florida, the insurance is just crazy expensive. If I'm paying $60, I would never even thought about going self-insured. I'm only paying $60 a month, you know what I mean? It wouldn't even cross my mind. When I started looking at numbers, I'm like, holy shit, I'm spending a crazy amount of money paying insurance. Every couple of years I get a notice, we're going to increase your premiums by 20%, we're going to increase it by 15%, by 20%. I'm like, what? And then that's what caused the wheels to start to turn. And I did that, but you're right. If it's $60 a month, that's not going to affect anything.
Who cares? Yeah. It's awesome. Anybody else have any main takeaways for Fernando?
This conversation is more so taking in like the diversity of perspective. I think everybody has a different perspective and are successful in their own rights, but nobody's wrong.
Yeah.
And I appreciate that about the conversation that we're having is, one, enlightening each other on, because like me listening to this conversation, I'm like, damn, I need to start getting more aggressive on paying down my principal. So I can be free and clear on some of these properties, because it makes sense. Like, sometimes, especially like with insurance, like they're raping us down here. So, in our specific, in this specific market, so that's kind of what I took from it. Quick question, Fernando, like what markets does your company serve? Like, is it just South Florida, or are you like in different states, cities?
He's in California now.
I'm in different states and different countries.
Really? Okay. So I'm gonna
Yeah.
some stuff. That's it. Appreciate you.
All right, guys, enjoy. I'll see you guys back in the States in about a week.
We will.
Fernando, one question for you, dude. Are you considering doing an EXP in Colombia?
I'm sorry, say that again?
Are you considering getting a group going in Colombia with the EXP?
We tried.
You did?
Yeah, there's an EXP group in Colombia. I actually have 3 girls in Colombia right now. And one of them actually runs my management company there. But EXP isn't already in Colombia. They have a big presence in Cartagena.
Awesome. Cool, because I've got a few people over there, and I was talking to Brian about how it works in DR, and I have a few people in Colombia, so I was just wondering what your experience was over there.
Yeah, here's the thing with Colombia. Colombia, it gets, and I'm sure it's very similar in the DR. The problem with Colombia is that the real estate industry is not regulated at all. So majority of the agents there are independent. So for example, the biggest
This was the best one.
work there are not part of Remax. So to convince them to bring in EXP and pay the $85 a month, for them that's like crazy. Like I said, there is a presence at EXP in Colombia, but most of them are going to use EXP name, but not pay EXP.
Oh, wow.
Makes sense. And then I'm curious, real quick, before we let you go, because you said something which I thought was interesting one time at one of our events, and you were like, yeah, you know, you've taken a route, it's worked for you, it's been great, you use multiple forms of leverage, you have labor, capital, content, because you do bang on social, software now with code, and it works. Like, you know, you've went up the opportunity ladder, now you have more time freedom and more location freedom. You also said, though, I remember you saying, like, if you had like looked at the EXP model before, and if you had poured your energy into that, what that could have grown into. So can you talk to a little bit, because there's like, it's just different vehicles. Like I see this as a vehicle and that as a vehicle, and you can do both, which is what I'm doing, but can you talk a little bit about how you view that vehicle?
I'll say this, I wish EXP, I would have known about EXP or moved into EXP much earlier in my career. Like much earlier. Because I firmly, I had this discussion with Eric, I look for, we've already discussed this, I look for cash flow. And I think the rev share model that EXP has by far is what attracted me to EXP. Like for example, I don't focus in real estate sales at all. I get them because I get customers that call me up and they want to invest in short-term rentals. So I get them as a client and we look for the properties and we purchase them. But for example, I don't focus on that, and even the fact that I don't focus, I get about, the last 3 months I've been averaging over $2,000 a month that I really don't do anything for. All I did was tell one person about EXP. She came out, my Colombian girl came out, which is the two people under me, and then we had 4 other people join that I couldn't offer them. They were the one that brought it up. So, you know, it's $2,000 a month that I can get for really doing nothing. Because I don't focus on the sales side of it. And if I didn't have my current business, I would 1000% be doing nothing but agent attraction. That's it.
Yeah.
I wouldn't do anything else but focus on agent attraction.
And I love that because like we talked about today how like your time is your most valuable asset, so you have to be very conscious and purposeful about what you stack your time on top of, and you want to make sure it has the biggest multiplier. And what you're saying is like you know your business is fantastic, it's great. If you didn't have it, you see the compounding and the leverage of the other thing, and you'd be spending all of your time and attention on that.
100%. I didn't have my company. That's all I'll be doing.
Love that.
Fernando, let's be real. How much did Aaron pay you to say that?
Actually, it didn't pay me. Actually, you do owe me money though. You should pay me for saying that. But I think you guys know the story. I said this. I mentioned it last year. Aaron, I've known Aaron forever. I fucking love the guy. I think the guy's a rock star. You know, I look up to the guy. But I never went with him to Keller Williams. I didn't like that model. It wasn't what I was interested in. I had briefly looked into EXP, thought it might be something, but the moment Aaron called me and said, hey, I'm gonna do something big, something that you're probably not gonna expect, and when he said he was going to EXP, I said, say no more, I'm going with you, buddy.
Hey, and you know what's funny? That is 100% true. It was literally the next day, and I was like, yeah, I'm thinking about this. And he's like, no, like, I'm fucking going. Let's go right now. Like, there was no, like, you know, I need to think about it sort of thing. It's awesome.
Yeah, which was a mistake on Aaron's part because it took Aaron a little bit to separate from Keller Williams, and I would hound him on the regular. Dude, what the fuck are you doing this, bro?
I love that, bro. I love it, which is great because like he was helping me to move that process forward. And I'm glad you did, brother. I feel the same about you. Thank you for taking your time out of your trip. We appreciate you. Let's get 2 claps and a Ric Flair. Woo!
Those people that relied heavily on Airbnb or VRBO being the 2 most popular, you're in trouble. Yeah, it is a bust for those of you that have no freaking idea what you're doing.
I feel like the days of that are like coming to an end.
They're not coming to an end. They came to an end.